Could trade wars be the iceberg that sinks the global economy? This is the question that has been at the forefront of the conversation between Cyrus and Sean Fu. Their exchange covered a wide range of topics from the US-China relations to international financial trends, offering some insightful perspectives. They touched on the Trump administration's tariffs, which have targeted imports, particularly those from China. While these tariffs are often perceived as a tax on foreign exporters, they are actually paid primarily by domestic consumers. China's response has been equally aggressive, implementing retaliatory tariffs on numerous US goods, including coal, crude oil, and agricultural machinery. The consensus among economists: these measures are likely to increase inflation and costs for US consumers. The strength of the US dollar as a global reserve currency also came under scrutiny. Countries are growing increasingly hesitant to hold US dollar assets due to concerns about sanctions risk and rising US debt. This has led to a diversification away from the dollar, especially among BRICS nations. In fact, cross-border trade in Chinese yuan has surpassed 50% among these countries. The conversation shifted to China's manufacturing sector and its so-called overcapacity. Rather than viewing this as a negative, it can be seen as China exporting deflation. The fierce domestic competition in China has led to the creation of highly competitive and innovative industries. These companies must survive intense internal competition before they can expand globally, which ultimately benefits global consumers through lower prices and technological innovations. Technology and innovation were also key themes of the discussion. Despite US chip sanctions, China's DeepSeek AI represents a major technological breakthrough. Chinese innovation is increasingly cutting across sectors, with Western companies like Apple partnering with Chinese firms for market-specific AI solutions. However, a potential financial iron curtain is forming as the US restricts investment in Chinese technologies. Gold as a safe haven was another noteworthy point. With a significant price rally, nations are increasingly using gold to diversify away from US dollar assets. China, in particular, continues to accumulate gold while reducing US Treasury holdings. Looking towards the future, the economic outlook remains uncertain. An escalation of trade wars could lead to higher inflation and interest rates, potentially triggering a recession. A significant decoupling between the Chinese and US economies is also emerging, with China's economic stimulus increasingly focused inward. This conversation underscores the intricate interplay between geopolitics, trade policies, and financial markets in an ever-changing, multipolar world economy. It's a vivid reminder that no economy is an island, and the ripples of trade wars can quickly become waves that impact us all.